In this video, traders, we're going to look at what is a trading reversal and the best practices to trade them. Stay tuned. Hey, a very warm welcome to traders and investors. So reversal trading is all about capturing the end of moves, the end of trends, the end of supply-demand imbalances, and the shift back over. And if you look at some of the great traders, Paul Tudor-Jones being one, he focuses exclusively on reversals. I think he's probably in the minority of guys who do that, but the important thing is that he's trading with what he perceives as his greatest edge. He says he makes his most money trading those reversals and he lets other people capture the trends. So if you are a trader who likes to trade the end of trends, likes to try and capture the trading reversal, then this may be for you. And even if you're not, have a look at it anyway, because it might help you time the end of your trend trade and get out of the trend at the right time. All right, so let's just define uptrend. Uptrend is defined obviously as new highs, higher lows, higher highs, just keep pushing on, fresh territory. We all get the idea, and the same with the downtrend, just vice versa. So what are the three things that ultimately are catalysts for reversing a trend? So the first one is fundamentals. Fundamentals could actually just change in the market. If that's a company, let's say a company now starts to lose market share over time. Let's say they're not paying as much dividend. Anything, we could stand here forever and talk about it. Let's say a market, let's say there's a lot more crude oil coming out, so there's a lot more production and not less demand. So and we're in uptrend, that might turn the price over, or vice versa. Let's say we're in a downtrend and all of a sudden there's a massive choke on supply or a massive demand for their product. So that could be a commodity. Then we could have an index where the country's GDP is struggling, the country's economy starts to struggle. Any of these things, like currency starts to change, the interest rates start to change on a currency. Some of the jobs numbers start to come out and suggest that maybe all sorts of things. You get the point, guys. There could be a fundamental shift in the valuation of that market, and that will change people's perceptions. That might not be an instant reversal. That might take some time to do. But as that starts to feed in, as traders start to think differently about that market, we're going to get a reversal. So difficult for us to time as traders, but as traders, we can keep an eye on these fundamentals. We don't have to be fundamentalists and start looking really closely, but we can keep an eye on what people are watching. When bad news starts coming out, initially in a bull market, bad news is not even going to touch it. It's just going to keep going, keep going, keep going. But as it starts to get more and more, you'll start to see price waning a bit, struggling, starting to curl, not being so aggressive as it goes to highs. Very, very stretched now. More bad news hitting it, more bad news. That might be your catalyst to look for a reversal. And for me, I then like to add that with technicals. Number two, one of the reasons that prices will reverse is on technicals. Now, obviously, we have very short-term reversals. So we're looking like a 1 minute chart, 5 minute chart. We see intraday market, rip up to the high side and then reverse. That's not going to be fundamentally based. Then we've got medium term and long term. The long term is when we get the fundamentals and the technicals. The fundamentals will ultimately rule it. The technicals might help us manage the risk on that reversal a little bit better. If we're short term, we can forget about the fundamentals. We're looking at technicals. So reversal patterns in technicals are going to be things like our double top, our triple top, our rounding top. We can name one of them, head and shoulders, all that kind of stuff. Anything that's suggesting supply demand is shifted back, shifted, not quite as strong and rolling. Combining that now with some changing fundamentals, especially on a longer time frame chart, now we're talking a potential trade opportunity. Short-term chart, we're looking at technicals. We're trying to find that sweet spot of how far this thing's gone. Is it waning now? Is it starting to struggle? Look at where it's come from. All those things that we take in with a reversal pattern to take the trade. All right. Next one I've got, guys, is the catalyst from news. So often we have surprise news come out, and it could be earnings on a stock. Let's say a stock has been trading very, very well. All of a sudden they come out with weak earnings and do a profit warning. That is going to be a catalyst that people then reprice that stock lower because their perceived valuation is lower than it is now. Same with the FX pair. Let's say a surprise interest rate announcement, cut or rise. That's going to change the perceived value. We have all sorts of catalysts coming out. And that can be often a very, very, very key turning point. And one of the things we see often, guys, is stocks. Not bad stocks, stocks that are broken. All of a sudden they've been hammered down, they get aggressively shorted. All of a sudden they come out with strong earnings, bang, they get a gap up, they get a good strong candle, and then you get, that's the time you can see a reversal. It's on your radar because it's very, very weak. Earnings come out, change it. Maybe it tries to pull back. There's your technical entry there. There's your catalyst from news. Fundamentals have changed that eventually because they're changing the fundamentals to slightly more positive. That then gives you a reason, or people a reason to come out of the short position or to get long or to get more interested in it, or vice versa. And that, as traders, we can jump on that and hope to ride the wave. If we get on early enough, ride the wave of the other money coming in after us, giving it a push to the upside. So three things, those are three things there, reasons that we might get a reversal in the market. Other things that I want to look at are the market we're picking, the strategy we're employing, and the risk reward. Now, it's very seductive to look at a trend and say, if I just capture the end of it, the risk reward is huge, right? And that's the trap a lot of traders fall into. We say, oh, it's gone up for so much, it's way too much. If I just pick the top on that, my risk reward's massive. I can have a stop above the high and I can come down. Now, in theory, that looks nice, right? You've got a nice little uptrend. You think, if I can just pick it there and I can go short and I can have a stop here, that's great. But ultimately, if your timing is wrong, you'll have a death by 1,000 cuts. Sure, that's only a small stop, but it might do that for another 10, 15 times before it rolls over. So you've got to be very careful and always err on the side of caution when you're trading reversals, especially in strong trends, guys. Strong trends will go on way, way, way further than you ever expect. So, you know, being cautious of that. Point number one is the market. Different markets exhibit different characteristics. Some markets are prone to reversals more than others. This might be more on a medium-term basis rather than long-term basis, but often you look at eyeball different charts. Some charts are, you know, very range bound. They'll run up for a couple of months and then reverse back down again. Some charts will be very, very trending for multiple years in a row. You don't really want to be trading the reversals on those multiple year trend trades unless there's a significant shift in fundamentals, a significant catalyst, a significant technical aspect that all lines up that you can then trade that. You'd be very, very careful of that. Whereas the charts that exhibit those reversals regularly, you can be less strict with your criteria. You can say, okay, well, that technical setup works nicely in that. That fundamental shift is going to probably move that because it's not that strong anyway. So it's picking the right market. And then number two is picking the correct strategy. You know, you want to use your technicals like we talked about, the double tops, the double this or that, combined with the fundamentals. So your strategy should be, hey, I need a catalyst, I need a fundamental shift, and I need an actual technical so I can frame my trade in terms of risk reward, filter, and trigger. Once you've got that, then you can bolt that in and say, okay, now I'm going to wait patiently. And that's the biggest thing, guys, is for trading reversals, is patience. You go in too soon, if you've got FOMO, if you think you need to get on it now, you'll get killed by it. You have to wait, you have to wait, you have to wait. And don't forget, reversals is one of the few things that you can be a little bit late on and still make good money. Because if it's a true, genuine reversal, even if you're quite late to the party, it's going to have a long way to go. You've got all the time in the world to get on board that. Well, I say all the time in the world. It's not so much as a rush as some trades. And the final thing, as always, guys, is risk versus reward, and specifically risk. The reward looks juicy, but the risk has to be sensible. And that doesn't just mean a tight stop above the high. It means, hey, what's the likelihood of this turning? If it's very unlikely, you're going to get stopped out again and again and again and again and again. Your risk is huge ultimately. You're better off saying, okay, well, if I was prepared to take 10 stop outs, why don't I take 5 stop outs, the risk on that, and risk that in one decent trade? Wait for some sort of turning pattern, wait for it to retest and fail, see some signs of supply demand shift, see some news flow change, have an extra catalyst as well, see the technicals, line up, line up, line up. Then I'll take my trade. I've capped my risk. My reward is going to be pretty high. My strategy fits in with this. I've picked the right market for the job. Now I've got a good chance of this reversal happening and making me a profitable trade. All right, guys, take care. See you in the next one. Bye-bye.